Hey, how's it going? Anmol here. Welcome to another edition of the Swing Trading Newsletter. Welcome, everybody. Um, and let's dive straight into it. Again, hopefully, you guys are having a nice weekend, and hopefully, you are having a good year so far. For me personally, been a pretty good year. And today I thought I'll kind of show you something here, which is something I usually show the chat room sometimes here and there, just so what's possible. Like once all that we're doing in the newsletter isn't something like special, right? I mean, a lot of people are saying, "Oh, Anmol, you're killing it. You're doing great," and I appreciate that. Thank you, and I am. But this is something I've been doing for many, many years, and this is why I tell people like that's one of the reasons I personally don't see a benefit of being right like an investor. Like, why not just swing trade? Keep moving the money around. It's not a lot of work, right? It takes a few minutes here and there, and you could get way better returns than you would get doing anything else. And so I thought I'll kind of show you something over here. So this is my interactive brokerage account right over here. See, that's my interactive brokerage account. So if I show you, let's say go to the 1 year P&L, right? Notice how the account has steadily gone up, right? It's not like I'm doing anything special. Is that the account has specially gone, kind of consistently gone up. Now, obviously, I've done some options trades in the account. That's why you see these spikes, right? Suddenly the account goes up. That's because when the options expire worthless, you get all the money in your trading account, and so on options expiration, usually every Friday or so, I'll get a bump in my account, and so that's that. I mean, hopefully you guys can see that, right? The account has slowly gone up over a period of a year. Last year, it's about $230,000. So far in the 1 year, if I take a look at year to date, right? Take a look at year to date. So only 5 months in, we're already locked in $134,000, and that's the whole trajectory of the account. And this account is compounding, which is meaning. Let me open up the spreadsheet here real quick. Okay, let me open up the our swing trading spreadsheet so I can tell you guys or show you guys, in fact, what I really mean. So here's what I mean. So let's say if you're doing 2% per trade, right? So if you're taking every single trade in the swing trade newsletter and you're risking 2% of your account per trade, right? You would have made already for the year 42%. 42%, right? Now, let's say you risk 1%, right? Let's say you did not risk 2% per trade. You're like, you know what? I'm new. I'm going to risk 1% per trade. You're still up 21% for the year while the market's down, right? The market's down. I don't even know what's down now, 10, 15%, 20%. So the market's down for the year and you're up 21%. So you're 40% ahead of the market returns, right? And guess what? We're only 5 months in. We got half the year still to go, okay? Still. So my goal is obviously I double that, right? End the year maybe 80%, right? Because we're doing pretty well right now. So, that's what I'm trying to say is that your account, if you grow that, it start looking like this. Because check this account. I started this account just for tracking purposes, okay, back in May 1st of 2019 with $45,000, okay? 45 grand in the account May 1st. And now, if you take a look here, May 1st of 2020, right, about 1 year's in, the account sitting at $275,832, okay, on Interactive Brokers. And that's what I mean. You slowly grow the account. I mean, notice the trend. It's not that much, but we're suddenly getting 1%, 2% here and there, and the account's been growing up. Again, albeit, I admit, I did some options trades in there, so it's not just purely swing trade newsletter. There's some option trades in there that's causing these spikes. But overall, if you look at it, that's what's possible. And this is why I was like, if I was an investor putting my money in a dividend stock, right? If I'm putting my money in a dividend stock, if I'm putting my money in, any form of investment, it would take me 10 years to get the type of returns that you could get in 1 year swing trading. And that's why I feel swing trading is the fastest way to gain wealth. I mean, when I bought my first real estate property, right? I still have it. It's in London, because I went to college in London. So I bought my first real estate property like before I even graduated college, right? It's a flat that I have in London. It's a very tiny, it's like a 2-bedroom, little flat. But that's the first property I ever bought. I still have it. And guess what? I've owned that property now for about what, 9 years now. And every month it pays me not much, like £1,500 a month, which is nothing. But guess what? I haven't even been to that property since the last 10 years. I have an agent who lists it every month. He puts in in my account. And guess what? Since I've had the property for about 8, 10 years, the property's already paid for itself several times over just by the rent, right? The property's already paid for itself, and the value's also gone up. So what I'm trying to say is like, this is how I started. I grew an account, right, from swing trading into a bigger one, took that money, put it in, real estate, and now, between me and I also team up, with some investors like my family and stuff like that, and we have a lot of properties, all over. I have one over here in New York. It's a commercial property. It's 10,000 square feet. I have in India. We have commercial properties that we list as office space. But again, all that wouldn't have been possible if I didn't have any money to buy those properties in the first place. And this is how I grew the account into a bigger one. And that's why I tell you, like, this is how you do it. You're not going to get rich investing unless you have billions of dollars, unless you have multi-million dollars. That, okay, yes, you have millions of dollars, you make 10%, okay, you make 6 figures a year. Unless you have that already, investing, in my opinion, and again, this is something that it's going to be controversial. Everybody's going to disagree with me on this one. But again, results prove itself, right? Results prove itself. That's all I can say. Is that people will disagree with me all day long on that. Oh, you should have investments. You should have savings. I'm like, yeah, but isn't swing trading really savings? Because we're in something, we're out of a stock. We're in something, we're out of stock. So we're never actually risking our money. We're never actually losing our money. It's not like, one day we wake up and something bad's going to happen. We have stop losses and stuff like that. So in my opinion, swing trading, if you do it correctly, like we're doing in the newsletter, is, in my opinion, the fastest way to grow an account, build wealth, and do anything else you want. And again, this is not a sales pitch, because I don't need to sell you guys. You guys are already here. You already sold. So it's not like I'm trying to sell you something. I'm just saying that this is something I'm really passionate about, and you can tell because the newsletter started and it's been I've been talking 7 minutes and I've just been talking about this. And the reason I say that is because people don't realize it. People do not realize it because they're like, yeah, let me put it in the market, 8 to 10%. I'm like, are you stupid? Okay, yes, you can put it in the market, and yeah, maybe unless you have millions of dollars, right? Unless you're somebody who has tens of millions of dollars that you want to diversify, right? Some money in the markets, some in the mutual funds, some in hedge funds. Yes, that's correct. If you have millions and millions of dollars, that's the right way to do it, right? Warren Buffett way, diversify. But if you're somebody who's trading with maybe 5-figure account, 6-figure account, right? Even 7 figures for that matter, it doesn't make sense, in my opinion, to diversify. Right? I don't diversify, right? I mean, I've been trading 10 years now, and all I really do is I have an account which I day trade in. I have an account which I swing trade in. I have an account which I take my Forex swing trades in. Right? I have an account where I, take my options trades in. So why do I need to put the money in the market where I can just get, multiple types of returns doing all these things? So I'll tell you one thing. If you are liking the Swing Trade newsletter so far, if you like the Swing Trade newsletter, you like this methodology, you're like, okay, this is something I could do. My suggestion, join the Forex too, right? So we have a Forex trading room that runs every day from 12:15 Eastern time till 1 o'clock Eastern time. So about 45 minutes or so. Now in the Forex room, I'm not day trading Forex. I do not day trade Forex at all. I swing trade Forex exactly like I trade in the newsletter, right? I'll buy a currency, maybe hold it for 2 to 3 days, and I trade it just like I trade the newsletter. Okay, guys, here's the entry, here's the stop loss, here's the target. And we're doing the exact same thing. So that's why I tell people, if you got money, right, rather than investing, what you should do is, hey, let's open up a swing trade account. Let's do the swing newsletter with trades, right? Let's open a Forex account. Let's do the Forex newsletter trades, because there are swing trades too. I'm taking maybe 1 or 2 trades a week in Forex, right? That's not a lot. So you could do that too. So do that, and you could get better returns than investors. That's all I would say. And without further ado, let's get started. So markets, on Friday last week, beginning of the month, closed red. We had a gap down, market gap down, tried to go higher, but then ended up closing all the way down weak, leaving a topping tail on the spider. So this is actually pretty bearish, right? I won't lie. This is pretty bearish. And maybe this is the reversal that we've been looking for, right? Market went down hard. We got a 50% retracement. Again, let's take a look. How much retracement is it even? Where is the retracement? So let's even see how much retracement is this. So yeah, so we look at that. Oh, that's actually pretty good. 61.8 retracement right to the T, right? So again, I don't really care about Fibonacci that much, but it's interesting to see. We went up, we went down, right? We rallied back up to the 61.8 retracement level, and from there we've started to pull back. And maybe this is the reversal that everybody's been looking for. I hope this is a reversal. I really, really do, because I want the market to go down, because it creates good opportunity, especially for options trading. It's one of the best environments to trade. So even on the weekly chart, we've left a pretty nasty topping tail. So it does look like the market wants to go down, and I hope that happens. But another scenario that's possible is, because we didn't touch the 200, we missed the 200 MA by just a little bit. Sometimes the market likes to do this, right? One, right, like a two, and then it likes to do maybe a three, and then you start coming in. So I would have felt a little bit more comfortable if the pullback happened like this, one, two, one more move up, and then pull back in. That would have been much more reliable, because again, you had the 200 MA, you got the three moves up in a row, breaking off a channel. So that would have been more reliable. But again, this is not bad either. Just keep in mind, right below, you see, we got the 21 EMA, 50 EMA, all holding it. So the key area for the market would be 275, right? 274, 275. So if we stay above here, there's a very good chance we go down, right? And then we go right back up again and do what we were just talking about, right? So there's a very good chance. So that's a key level to keep an eye on the markets for next week. But the good part is, with swing trading, we don't really care what the market's really doing, right? Because we just trade, stuff that looks not like the market, and we have our entries and stop losses, and that's the good part about it. So let's take a look at the US dollar. US dollar, again, continuing to remain sideways. It's not been able to get a move either way. So dollar is not really giving us any indication at all right now what the market's up to. Gold, on the other hand, same thing. Gold's also just consolidating, but holding strong, maybe getting ready for another move up here. Silver is actually looking really weak. Silver, to me, looks like if it takes out this 1350, probably continues to slide lower. But right now, it's still consolidating. It could either break to the upside as well, because what we're really getting on the silver is you're getting this little wedge pattern. So whichever way it breaks, that's the way it probably goes. All right, let's take a look at the Aussie yen, Aussie dollar, Japanese yen currency, because I usually like to look at it because it gives us a good heads up of what the market might want to do. And you can notice that, right? You can see that over here. Aussie yen, went into the gap fill, found resistance, put in a doji day. All right, so that gave you indication that maybe the stock market's going to sell off. What happened next day? Next day, Aussie yen, big red candle, and stock market also gapped down. Did you see that? So Aussie yen put in a big red candle, stock market also came down, and Aussie yen's continuing to go down, which suggests that maybe the market also wants to continue to go down also. For those of you, this is your first time, if you take a look at them side by side, look at that. Aussie yen is basically a good indicator for what the market might want to do. Aussie yen started to sell off right about here. Stock market sold off, right? So Aussie yen sold off, stock market sold off. Aussie yen bounced, stock market bounced. Aussie yen came in a little bit, stock market pulled back a little bit, right? Aussie yen went up, right? Stock market went up. Aussie yen pulled back a tiny bit, stock market pulled back a tiny bit. Aussie yen went back up again, filled the gap, found resistance, stock market went up again, and also starting to pull back. So Aussie yen is usually good, kind of a heads up, not big of a heads up, but sometimes it gives you a good heads up. And Aussie yen looking like it wants to go lower, which means the market might also want to go lower. But the support on Aussie yen is 67.50, which will align with the 275 on the spiders that I was talking about. Let's take a look at oil here. So USO, they did a reverse split, right? They did a reverse split. So there used to be a $2 stock. They did an 8-to-1, I think, reverse split. Now it's an $18 stock. I would leave this one alone right now. I like the pattern, right? The pattern is a pretty good pattern for a bounce. But I think, you know what? Let's stay out of trouble. I just don't like stuff that can gap up or gap down against us. So USO, I'm going to leave that alone. But it does look like it wants to go higher, especially if it gets back above 22. Okay? So that's the USO. And let's take a look at bonds real quick. TLT. Again, continuing to go sideways. Nothing exciting going on here on the bonds. I would just leave that alone, just consolidating basically. Let's take a look at the XLF financial sector, right? Financial sector ETF, financials, XLF. So XLF, has actually been lagging the market, which is not a good sign, right? Because when the stock market went down and recovered real fast, XLF recovered, but not a lot of the market. So that's not a good sign for the markets, because when the market's going higher, you want the financials to lead the market, which hasn't happened in this case. So that's not a great sign. Let's take a look at transport sector, IYT. So again, same thing here. When the market's going higher, you want the transport sector to lead the market higher. The fact that The transport sector is like a 40% retracement. XLF is like a 40% retracement, right? So they're both lagging that market up move, which is not what you want to see when the market's going higher. All right. So that basically tells me that it's very possible that the market wants to come all the way down. Now, if not all the way down to the prior low, but at least looks like we're probably going to get some sort of a pullback towards this 263, 258 level. And I would absolutely welcome that pullback. All right, so let's take a look at some of our trades that we recently got out of, and let's see what we could have done. So first trade I'm going to talk about a loser is MRSN. So MRSN, the trade on this one that I took was I basically tried to buy a breakout, right? You see that area couldn't get above 10. We bought that breakout. We put our stop loss under here. It gapped up, but it never really got any follow through. It came back down and it stopped us out on Friday. Which is okay because we were going to get out of it anyway because it's got earnings coming up in about, 10 days or so. And the pattern that I was looking at was basically the weekly chart, for those who are wondering. MRSN, what I liked about it is you see the weekly chart was in a phase 4 downtrend, trying to go into phase 2. And I was looking at it like a 4-bar play, right? See that wide range green candle, inside candle? So that's what I was really trying to play, but it didn't get it done. And, it is what it is. So MRSN, a no-go for us. That one is a loser. Let's talk about a little winner here with the VLRS. Okay, VLRS. VLRS is now, this pattern is called the uppercut pattern. So we just, again, I just made this name up in the chat room. So in the chat room, we were talking about it. We were like, guys, if you've noticed in the Swing Trade newsletter from the beginning of the year till now, a lot of my trades have been, especially the ones that have been working, they are exactly the same, right? They're the exact same pattern. Stock that's beaten down, starts to go sideways, then starts to break higher. And, those are the ones that we've been doing pretty much every single trade, since the beginning of the year. And we've been pretty good at it. So I was like, I don't have a name for this pattern, right? Let's figure out a name. So in the room, people gave suggestions. And then we decided on the name being called the uppercut pattern. So this is now going to be called an uppercut pattern. Why is it called the uppercut? I mean, again, imagine what a boxing uppercut looks, right? I'm going to be my best artist right now. I'm going to try and be a good artist. So here's a boxer, okay? And here's his opponent, okay? I'm going to try my very best. I suck at drawings, I know, right? And he suddenly, boom, uppercuts it, right? So it comes from bottom and then goes up. Make sense? Just imagine how uppercut would look in real life, right? His arm goes down and boom, punches him straight up in the face. So that's what uppercut is, right? Goes down and boom. So that's the uppercut pattern. Again, I am trying to build the swing trading course because you guys have been asking me a lot. So it's like all the knowledge is in my head. Like Jared's very good with putting everything in slides. With me, I'm a trader. I've been trading for 10 years now. So I have all the knowledge in my head. Now I'm for creating a course though, right? It's different. Because I can't just say like, hey, stock goes down and boom, right? I got to come up with criteria. So I've been thinking real hard. I've been trying to, make a course for you guys on swing trading patterns. And so this is going to be called the uppercut pattern in the course. You guys heard it here first. All right. So that's the, VLRs was a nice trade for us in the newsletter. We got into this trade right over here when it broke out above this sideways range. See that sideways range? Those who have taken PTS course, remember in PTS course, phase 4 downtrend, phase 1 sideways trend, breaking into phase 2. That's what it was. Phase 1 breakout, uppercut pattern, took it long above this base. Stop loss went under this base, and on this nice little green day, we got out, we made our profit, and that's all we really needed. And that's a good exit because look at it, came all the way back down on Friday, right? Now, next one on the list was CCL. This was, again, the uppercut pattern. Again, stock is in a phase 4 downtrend, phase 1 sideways trend. You got this little wedge pattern, right? And we basically bought CCL when it broke above this wedge pattern, stop loss under this base. Boom, went up. We took our profit, and then that was that on CCL. And now it's back down again, right? So that was that. And then we had a nice trade on Sage, SAGE, another uppercut pattern. Stock going down, goes sideways. We bought the base breakout above phase 1. Went up to the 50-period moving average. We got out, nice profit, and now it's back down again. So that was Sage, was a pretty good profit for us. Now to our open position, actually, let's take a look. What else did I had a bunch of trade. Yeah, so SIG was another uppercut, right? SIG uppercut pattern again. Stock is beaten down, phase 4 downtrend. You got a little reversal wedge to the downside. Bought it long, put our stop loss here, bought it long here, went up, and we got out. Nice little profit. And now this thing is back down again. So again, we're locking in gains. That's what trading is all about, right? We don't want to hold on. Yes, it could go much, much higher. But for me, I follow my trading plan. And I'm swing trading. This is what I'm telling you guys. We're not just buying a stock and holding it for ever and ever and ever, right? We're not investing. We're trading, right? In and out, in and out, in and out. That's the whole nature of this beast. Just like NNBR. Remember this stock right over here? Right, NNBR. We swing traded this stock 2 times. Now notice this. If you were an investor in this stock and you bought it over here, right? You've been holding it for a couple weeks, it went up, and now you're back down. You haven't basically got any returns, right? And now you have to gamble with earnings. Not what I want to do. Not what I want to do. So we traded this twice, and we made money both times, right? Again, do the math. Do the math on what you would have made trading an NBR. So in the newsletter, we called it right over here, right? Boom, next day we got a green day, out, nice little profit. And then we get a reversal wedge pattern right over here. Boom, we buy it again, it moves up, out, we made our profit, and who cares what the stock does now? We traded it twice, we made money, right? If you're risking, again, 2% per trade, I think the first NNBR trade, let's take a look here. NNBR, where's NNBR? I'm finding NNBR. Yeah, so see, the first trade, if you were risking 2% per trade, you made, what, 4.3% or so on that first NNBR trade. Second NNBR trade, right, you ended up making about the same. Right? So yeah, wow, look at that. That's actually so funny. The first NNBR, we made 2.17R. The second NNBR, I just noticed that we made 2.17R. So you basically would have made close to 4% on this one, 4% on that one, 8, almost like 9% on trading the stock twice, and you didn't even have to hold on to it, you know? So that's why I like swing trading a lot more. So NNBR was a pretty good trade for us over there. And yep, and that was that. Those are the couple of good trades we've had. VXRT was another nice one we had, right? We were in this stock at $2.06. We got out literally around the $3 area. That was a pretty good trade. And yeah, so right now we only have one open trade. Okay, we only have one open trade right now, which is this GCI, which is basically sitting at break even, right? I own this stock GCI at $1.10. So I bought it at $1.10. My stop loss is 84 cents, okay? 84 cents is my stop loss. And I'm looking for $2 on this as a target. So you can see here this green line has been going down, which is a 50-period moving average, right? But we are above the blue line and the red line. So the red line is the 21 EMA. The blue line is the 9 EMA. We're kind of above both of them right now. So if, in my opinion, you know, if it gets back above this little green bar's high, this thing is going to go towards the 50 EMA, which is basically $2. And if you look over here, that's also a prior pivot. So we got a prior pivot, right? We got the 50 EMA. We got a whole number of $2. So that's going to be our target on GCI as a $2. We're expecting this to be an uppercut pattern, and hopefully that's what happens. But we'll see. You know, the market's weak. Maybe this thing sells off. But the pattern looks good. And in my opinion, if this thing gets back above $1.25, we're going to hit our target, no problem at all. So this thing needs to get back above Thursday's high of $1.25. If it gets above $1.25, no doubt in my mind, this is going to hit target for sure. But now we're in it. It's sitting at break even. We will see what happens. Again, we're in it at $1.10. Stop loss is 84 cents. This thing has earnings coming up on the 7th of May. So 7th of May is Thursday. So again, whether it hits our target or stop loss, then that's fine. If it doesn't hit this target, doesn't hit the stop loss, then on Wednesday, we will be getting out of this trade. So before Wednesday, we have to be out of this trade, right? Because I don't hold anything through earnings. That's gambling. I don't gamble. So if it before Thursday, we have to get out of this thing. I will obviously let you guys know via email what I plan on doing. But hopefully before earnings, we can get some nice earnings, short covering. Because again, this stock went down so much, right? From like, look at this stock. I mean, look at this stock. Crazy, right? Which should be $26 stock down to like less than $1. So I'm hoping that maybe some people are like, you know what? Before earnings, let's do some short covering, and maybe that short covering can push the stock up higher. So that's what we're going to look for on GCI, and that's the only open trade we have. Okay, I have two new trades for you. Again, we have to wait for them to trigger. All right, one of them is this Tupperware long. I've been watching this stock for a while. Also kind of like an uppercut pattern stock that's been beaten down, going sideways, starting to look like it wants to turn higher. So the reason I didn't trade the stock before is because it had earnings. Looks like it already reported earnings and nothing really happened. So I'm going to look to buy this stock again, right, at $3.20, meaning it has to get above Friday's high. So if it gets back above Friday's high, I'm going to buy it at $3.20. Put my stop loss at $2.14, and then target I'm going to look for 525 area, which is basically this gap fill zone right about there. Okay, so that's going to be the Tupperware trade. Reward to risk is just okay. It's not a great reward to risk, but it's okay on Tupperware. Next one is going to be KLXE, KLX Energy. So this is a stock that I had originally called before, but we ended up canceling it. But now I'm going to buy it and put it back again. So I'm going to buy this thing above $1.46. So I needed to get, right now it's at $1.08. So if it goes lower, let it go lower. If it comes back to $1.46, then I'll buy it, put my stop loss as 84 cents, and then look for $3.49 as my target on KLXC. So that's a trade I'm looking to do. And I have another one, which I want to get back in it, which is Tilray, TLRY. So this is a stock we traded originally at $7.40. It went up in our favor to $9.75, but couldn't get going, so we got out of it at about $8.16. So we made some money on it, but not a lot. But now I'm going to look to buy it back again if it gets back above $9. So my entry is going to be above $9. Stop loss is going to be like $6.78, and we're going to look to see if it can move up into $14 or $15. It has earnings on the 19th of May, so we have plenty of time to trade it. So Tilray is going to be the third one I'm going to look to trade. All right, and that's that. I have a few other stocks that I like, but problem is earnings are very soon on it. So one I like is Torc, TORC, Restorbio, something like that, right? So this stock has basically just been going sideways for a long time, and then suddenly it gapped up on Wednesday, right? And then it held that gap area on Thursday and on Friday. So if you notice, what we've got is a big phase one from PTS, right? And now if it gets above this little range, so basically long above here, stop below here, it could easily move higher on TORC. I really like it, but it's got earnings on 7th May. There's not enough time to trade it, so I'm not going to trade that one. Another one I like on the short side is TSN, Tyson Foods. So I actually like this as a sell setup to short it under here, right? Stop loss over there and look for a move back down into these lows. I really like it. But again, notice this, it's got earnings basically tomorrow. So, we can't trade it. So that's the thing. All right, so that's that as far as trades are concerned. So we talked about our closed positions. We talked about the new ones that I like. And we talked about the open positions as well. Oh, by the way, check out some of the trades that I called, but I ended up canceling. And look what they've done, right? Remember this one, MLND, which we were originally going to do long of $1.70, right? On Friday, this thing went up to $2.13, a little uppercut here, right? From $1.70 went to $2.13. Now, I didn't trade it, but that had a pretty nice move. And there was another one we traded a while ago, MIST. Look at this thing. So we actually bought this stock at about $2 or something a long time ago. We made small amount of money on this trade, but I was going to look to do it again above $2.60. And I didn't do it, but look at that. Went from $2 to like $4.39 on Friday. What a move. Crazy. So, this is kind of my bread and butter setups. I don't like to, a lot of people look at stocks that are going higher. I mean, this is my bread and butter. I like to buy stuff that's been beaten down, killed, crushed. Everybody forgot about it. Volume's dead on the stock, and then suddenly it starts to curl higher. We buy it, boom, volume comes in, and then, stock goes right back up. So that's kind of my bread and butter setup. All you guys have already learned my setup by now by being in the newsletter, because you can go back and take a look at these trades. Pretty much every single trade is kind of that pattern. So, all right, so that's that. I'm also watching RAD, Rite Aid, but I want to see this come back above 1560. So Rite Aid, I've been watching this stock for a while to get back in it. This has been a great swing trading stock for us. We swing traded it here, we made money. We swing traded it here, we made money. We swing traded this thing here, we made money. So we made money every time we've traded this stock. And now I want to see it put in a green candle, right? Try to go back up again, and then maybe we can buy it above 1560, right? Something like that, and then we can go higher. So I'm looking to buy it, but I need it to come back up above 1550. I don't want to buy it down here because it could easily continue to go lower. All right, so that is that. So we talked about everything here. Again, if anybody's new here, this is how the newsletter works. So I send out this newsletter that you're watching on a weekend with the trades and with the video and all of that. And then throughout the week, you're gonna get updates from me via email, like, hey, let's cancel this trade, or hey, this trade looks good, let's raise our stop loss, or hey, let's get out of it here. So throughout the week, you're gonna get updates. Okay. Now in the newsletter right over here. So for example, in this newsletter, I call Tupperware, right? So that's going to be pending. KLXC, that's going to be pending. Tilray, that's going to be pending. So now you can see here which ones we're waiting for them to trigger, okay? These are the ones we're waiting on. Now, that's that. And then all the closed trades, obviously here say closed, okay? And all the open trades in very big, bold color says open, okay? So please don't email me asking questions like, hey, Anmol, are we still in that stock? Well, if it says open over here, that means we are in it, right? If it says closed over here, that means we're not in it, right? And I don't get in or out without telling you guys. So please stop emailing me about, hey, are we in it? Are we in it? What are we going to do with this stock? I will let you know. Okay, I will let you know. So those are the trades. Open will be here. Close will be here. The ones that we're waiting for will stay over here. Okay. And yeah, what else? Yeah, basically the entry is going to be here, and the entry price. Stop loss means this is our stop loss. Exit means which is the price that we got out at. If it says exit 1, exit 2, which basically means we got out half at this price, half at that price, right? This is our size of the stop loss, and this is how much we earned in our units or points, right? And this is our current stop loss, which will also say over here. And that's that. Now, I update this spreadsheet nightly, so don't say, hey, Anmol, I think that stock triggered, but it doesn't update on the spreadsheet. Yeah, I'm not going to update the spreadsheet every minute, right? Because I'm busy trading, doing my own account, options account, day trading. So I'm busy. So at night is when I actually update this spreadsheet. So that's why you want to keep an eye out on your emails. Now, I've been talking about text message for a while. We're still working on it. Our whole website's completely being redone right now. So you guys probably are aware we're having technical issues. Our whole website, we're basically revamping it completely. It's going to be freaking amazing when it's done. And then the new website will also have text messages. So that way you don't always have to wait for my emails, right? You're going to get text message. And I think text message is a much better way to deal with it because text messages are instant. So as soon as I send it, you get it right then and there. Whereas email, there's a delay. Because let's say there's 2,000 people that are being sent the newsletter. So the email server is going to send it like, let's say to 100 people, then 100 people. And so there's going to be a slight delay. So that's why we're launching text message alerts very soon. Bear with me. You will be the first one to know when it's actually launched. You're going to get a big, bold email about signing up. But just bear with us. That'll be fixed soon. All right, so that will do it for us. Have an awesome weekend, guys. And let's keep crushing it. Let's keep killing it. And I want to hear about what you guys think. So if you guys can do me a favor, if you like the newsletter, if you like it so far, you like the results so far, I want you to do me a favor. Leave me an email. Let me know how you're doing. If you have a screenshot of your trading account, I would love to see that, just like I showed you my account, right? Just like I showed you my trading account right over here, the growth. If you have your account growth, let me see it, right? And if you want to be featured, let me know. I would love to feature in the newsletter as a case study if you can show me an account. Okay, so that'd be great. And also, if you go to Trustpilot, which is something I'll show you right over here. So another thing would be that if you go on trustpilot.com, right? Trustpilot.com, and you type in live traders, so you'll see reviews over here, right? From a lot of the other members. So I would appreciate if you could write me a review, right? So you can, select 5 stars, hopefully you give me 5 stars, right? Select that and leave a review and let me know what you think. I mean, so far we've had good reviews, but I'm trying to get more. So I would appreciate that. Again, if you didn't have a good experience, please email me first so we can make it right. Again, if you notice, a lot of our reviews online, they're all good reviews. The only bad ones are about like customer service, right? Oh, I didn't get my access and all of that, and which I understand. I mean, we're traders first. I'm not a customer service representative, right? I'm a trader. Okay. So, I'm going to be focusing on my trading. We're working on it, right? We're trying to improve our back end. We're trying to improve the website. We're trying to improve customer service. But these are all growing pains of any company, right? Because when we started, we were just a group of traders trading, sharing ideas. And then suddenly, we get a lot of members. So we have to obviously build along with that. So we're working on it. Appreciate it if you can leave me a review, good, bad, or ugly. Good review, please leave it. Bad review, appreciate it if you give me an opportunity to make it right. All right. So have a good one, everybody, and I will see you guys in the next edition of Newsletter. Take care.